Well, hello everyone. This is our first episode in our English podcast. I'm really happy to have Efri here as our guest. And our podcast name is Money Unfiltered. So we're talking about money today. Um,
Ooh,
and we have Leah too here with us. So I think that we're gonna have a really interesting conversation. This topic, I think that it's a really interesting topic, and I think that there is a lot of people that they want to know what are we going to be talking about today. We're going to be talking about investing in stock versus investing in real estate, and who will be better to talk about this topic than our CEO Efri Argaman. So thank you for being with us today, Efri. I don't know if you want to give a little bit of intro about your background. You have a little bit of background in both sides.
Sure. So first of all, thank you for having me here. So a few words about my background. I'm an economist. I was a CPA. I was running a couple of public companies, and I've been doing real estate. And that sums up basically what I've done until today. And probably we're trying to answer the multi-million dollar question: what is better, real estate or stock market? I don't
Absolutely.
know.
it's a difficult decision to make, right?
Well,
Is
it's a
it?
difficult decision to make. And first of all, I would like to disclaim that everything that we say here is a nice conversation. We are not advisors, it's personal opinions, and everybody has the ability to think in a different way.
Right.
So, over the years, investors were always wondering whether they should invest in the stock exchange or in real estate. And for each investment, there are pros and cons, obviously. We always come to this question when the markets are volatile, and recently the markets have been volatile. You wake up in the morning, the markets is diving down. You have your lunch, and then in the afternoon it's climbing up, and vice versa. Um, so I think that the key word for investments in general it's diversification. Okay, everything has to be diversified, and I think that people, everybody wants the bang for the buck. When it comes to investment, basically, um, from an investment point of view, you have to question yourself what we're trying to achieve. Are you trying to beat inflation? Are you want to make a fortune? Do you want to leave inheritance? So based on the purpose that you're putting in front of yourself, then you can make your decision in a proper way. So there's no definitive answer to whether to invest in the stock exchange or in real estate, but there are pros and cons, as I said before, for each line of investment. And maybe we should start with real estate because this is our bread and butter. This is what we do on a daily basis. So real estate for the long run, if we look at the past, and the past does not imply that the future will be the same. Real estate prices have been constantly going up. So in most cases, when you buy a property, you invest in it for the long run, and prices will go up. How much up? So on average, between 2002 and 2022, over 20 years, residential real estate, this is what we do, did approximately anywhere on average, on a national average, about 3.1% per year. Meaning that it's not a great investment, one may say, because it is aligned with inflation more or less on average. However, real estate has a great opportunity because with real estate, you can leverage yourself. Most people will not buy real estate with cash. So basically, if you're capable to get a loan, and let's say you invest now in a property that is worth $400,000 and you would put $100,000 down, and let's say that the prices will go up by 25%, because of the leverage, you will be able to make 100% profit. That's fantastic. That beats inflation. That is very profitable. The downside for it, it's for the long run. You have high cost of investment. It costs money to invest in real estate. It's not liquid. It's not that you buy it today and you can sell it tomorrow. And also, you have to jump into several assumptions. One is, what will be your cash flow? How will the rental market in a specific area will look like? You may have to make assumptions about appreciation. It's a well-known fact that during the pandemic, many people fled off California and moved to Texas, for instance, and then prices spiked up until in January 2022, when all the restrictions were lifted off, people started to leave, and then prices came down all of a sudden. So it depends when you made the investment. So, and also there's operational barriers here, and of course there's solutions for that as well. So in real estate, basically, it's a good investment for the long run, for people who want to beat inflation, for people that have the ability to leverage. The downside for it, it's not liquid. Usually you have to make your choices very carefully, because in many cases, you make the money when you buy the property and not when you sell the property. If you put it in the right, yeah, go ahead.
And question, Efri, regarding the decision, what you're saying. I know that when you're investing in real estate, most of everyone utilize the formula, right, to know if it makes sense in terms of renting it. That will be the first thing. But I know that there are other factors about what you're saying to if it's going to be profitable or not. That it could be, for example, the area, right? If it's an area that is going to be easier or hard to rent. So, in your experience, what are those factors to consider to define if it's a good or a bad real estate investment?
So in a way, aside of the money, the Excel spreadsheet, because it has to make sense. I would look into areas that have multiple employers from multiple industries. So you don't find yourself like, what happened in Detroit when the car industry came down, and then all of a sudden everybody fled out of the city. So, one of the markets that we are working at is Indianapolis. Indianapolis is a great example. It's in the Midwest. Prices are reasonable. It's still an affordable market, and there are very strong multiple employers that are coming from different industries. So basically, if one industry is lagging, still there's enough employment from other employers. I would look into investing in areas that may be up and coming. So, and again, it might be, for instance, areas where, the municipality decides to run a revitalization project. It might be in areas where there is a new big employer. Let's say that, for instance, again, we are coming back to Texas. When Tesla moved to Texas, all of a sudden there was a big opportunity to invest in properties that are close to that facility. So if Apple all of a sudden will open a campus somewhere, it's a good idea because there will be demand. So we're looking mainly into demand areas. It's very hard to predict appreciation. So it's kind of like gambling because you don't really know. But if you look into stability elements that I just mentioned, there's high probability that there will be constant appreciation.
And what about the schools? I know that, and we hear this a lot from our borrowers actually, that they ask us about like a secondary property to be able to rent it. So, do you think that schools could be another factor to consider if it's a good or a bad investment?
Sure, of course. We always want our kids to be better than us. So, of course, the education system is crucial for decision making. Assuming that we want to invest in residential real estate, we want to rent it to families. then that becomes a critical factor. People will go where the school system is good.
Excellent.
And in reality, I would look also into crime data, transportation data. So not everybody wants to or is capable of owning two cars. So people want to live in places that are walkable up to the extent. People are looking into amenities. If you invest in an area that has a communal swimming pool and a nice civic center, that's an advantage. And generally speaking, when it comes to investment, I would look into the property as I would have uh, gone to live there by myself.
Okay. So, do you think that it's important for people are considering investing in real estate to like the property, to see themselves living there, and not necessarily, like something that they dislike?
Well, it's more of an analysis, meaning that I think that it's when you buy your own home, you take into consideration more factors like the material of the countertop in the kitchen, the master bedroom and suite bath. When you buy a property for investment, obviously you have to figure out what are the factors that will impact your potential renters, and then um, to put yourself in their place, say, hey, okay, if I was a potential renter, what would be important for me? And that may lead to a better decision making process.
Right.
Okay. And
I've heard that a lot from our customers when they talk about residential. They always worry about if there are any schools near the area, if it's a nice place to live. I think what you just mentioned is something that we hear very often from the customers. And one of their main interests is knowing that their families are going to be in a good place, and you always have to put yourself in the other person's shoes to
Sure.
understand and make
yeah,
sure that you're going to have, like you say, renters, because then you're going to have a property there just sitting. And at the end, having a property is also an expense, if you don't have renters.
Yeah.
and
I
could you think, Efri, about some tools? Because I know that we have our customers so that they're interested in this, but we have our realtors too that they work with investors too. Do you have any tools that could be helpful for them to utilize to define the crime rate, as you're saying, or other tools that could be beneficial for them to make a decision?
Well, sure. So first of all, there are a bunch of tools on the web. We're not going to advertise any of them, but basically, going to the main real estate portals, you can always pull information um, about school rating, um, crime rate in the area, comparable crime rate to the national and the state crime rate. You can pull information. There are specific websites that will allow you to analyze the rent data based on the comparables. And I think it's all about doing the proper due diligence. When it comes to buy real estate for yourself, your own home, the decision is emotional. When it comes to make a decision towards investment, it's more analytical. So, in my history, I own numerous rental properties, and always, you have to. It's very difficult. Some of them I bought sight unseen. Okay, based on the Excel spreadsheet, I had people on the ground. I made a proper inspection of the property, but I was trying to detach my emotions and my feelings towards the property and have cold analysis of whether it's a good investment or a bad investment. When you buy a home for yourself, obviously you want to feel it, to touch the walls. You have emotions towards the paint on the walls and so on, and you want to design it to your liking. With an investment, it has to be as generic as possible, because most of the renters will not stay in this rental for the long term, and the renters are looking for school system, proximity to their employment, transportation, and all the things that we just mentioned. So it has to be purely analytical.
Interesting. we talk about that a lot with Leah, that we see that with all our customers, how emotional is this decision. So I think this is a great tip for those that they are looking to invest, because most of the time, as you're saying, when we're looking at the property, we want to see it in our own eyes and we want to like it too. But if it's an investment property, I think that is extremely important. The fact that you remember that at the end it's an investment. It's not a house that it's not the house for you. So
Sure.
things to consider too, and like there are different type of real estate investment. There are other ones that are fixer uppers too. So I know that depending on that too, you need to define how much money are you going to invest or not in the property, exactly because of that, because it's not for you, so it needs to be profitable too.
It needs to
Uh,
make sense.
Sure, yeah, it makes, of course, and I agree with what you're saying. So, as I said before, it's an investment, and we're talking about investing in residential real estate. There are many other ways to invest in residential real estate other than buying the real estate itself. So, not necessarily if you want a cup of milk, you have to have the whole cow. And So, there are certain alternatives like investing in real estate investment funds, for instance, that invest in that specific asset class. Some of them may be even liquid. Some of them may be traded on the stock exchange. Some of them have the benefit of distribution over many properties, because uh, the risk of doing real estate investment, and I think that the number is that like 84% of the rental properties across the nation are being owned by moms and pops rather than institutional investors, is that most of these people will own between 1 to 3 properties, and it means that you gamble most of your free capital on single investment. It's very difficult to create diversity. You have to be rich in order to create
Yeah.
diversity when you invest in real estate. While if you take an alternative path to invest in real estate, then obviously you may make slightly lower yield in some cases, not always. However, you avoid dealing with the operations. You don't have repairs. You don't have a management company. Nobody will wake you up at 2 a.m. in the morning and the furnace has blown off. And you enjoy, on the other hand, having liquidity, having distribution of your funds over many properties, sometimes in many geographies. So you pay a little bit with the reduction of the yield, but you enjoy an increase in, or a decrease actually, in the associated risk.
And question I for you, you talked a little bit about the amount that you can invest, and of course there are a lot of people here that they want to start somewhere, right? And I hear different perspective regarding your first home. A lot of people say like that first home that you're buying, it is an investment, because eventually, as you're saying, like it's gonna gain in the market, and eventually you can sell for more. And we've seen cases of customers too that they sold it for more and they make a profit of it, or people that rent the primary residence and then they get a bigger one. So what is your perspective on this? You think that that first home could be considered in a way our investment, or is an expense?
That's a difficult question, because again, when you buy, it's very difficult. I think it comes more from your line of education, Christina, because it's more psychological rather than economical. But when it comes to buy your own home, people always have this idea of buying this nice maisonette that is surrounded by the white picket fence, and having their kids running in the background, which obviously have a nice lawn, and that's awesome. But not everybody has the ability to afford buying that awesome maisonette, and people many times choose to live in a rental for long term. Um, at least from my point of view, when I had a young family, I realized that my first home probably will not be the one that will fit my desires, but it will be only the starting point. And then, and maybe I'm different because I come from a different background. I looked into the attributes that will allow me to accumulate equity as fast as possible, so I have sufficient equity to move to my next home, let's say 3 4 years later. And yes, many people that are buying their first home, they do not necessarily have the need to have a large home or a big backyard or so on. And as you develop your family, obviously your needs are changing. But I think that if I needed to give young people a piece of advice, I would start as early as possible, because the benefit of buying a property, especially if you live in that property, is that you capture equity from day one. And if the property appreciates, which again, there's no guarantee, but if your property appreciates, you keep 100% of the profit of the appreciation for yourself. So if you make your choices right, you may end up building decent equity towards your second acquisition.
Excellent.
I
I
heard many
like.
people. I really go ahead. Sorry.
No, I'm just saying that I like this point of view, because it's a. I heard different perspectives, and I like the way that you say it. That at the end, it's just start, right? Start with something.
Sure, I think that investments, retirement funds. It's very difficult for us to think about it when we are in our 20s. Okay,
Yeah.
because at your 20s, you don't think about the day that you will retire, which is like probably 40 something years ahead. Young people tend to be more mobile. So you don't want to put roots in a certain area, because you don't know where, when employment will take you or your marital status will take you. You don't know anything about it. Um, However, I think that as a young person, if you know where you want to live and you buy your first home over there for yourself to live, then it's a good starting point. If you're mobile and you can afford putting a down payment towards a rental property, it's a great idea, and it may be also the base for your own home at a later point when you decide to buy a home for yourself. Um, so I think that as soon as you start, as early as you start making your investments, there's of course higher probability of accumulating sufficient equity when you get to the point that you want to put your roots into the ground.
It's very interesting because I've heard many people say that once they buy their first house and they see that they could rent it out and start getting money from it, they think about the other property immediately. So that's why they keep, buying more properties.
Well, it's tempting. Yeah. There's nothing like passive income. We all work very hard for our hard earned dollars. And obviously, the sweetest income is passive income. And talking about passive income, you mentioned before, the question that the elephant that we have in the room: what is better, real estate or stock exchange? These days it's very difficult to. Well, it's always difficult to give an answer, but these days it's even more difficult to give answers because the market has become extremely volatile. However, I'm coming back to the statement that I made before: is that before you make an investment, you have to answer a few questions. For how long do you want to invest the money? What is the probability that you will need this money in the near future? What are the goals of your investment? You want to break the market and make more than the index? Do you want to keep your money protected from inflation? Do you save for a specific purpose? So these are questions that you have to ask yourself, because there are many benefits to invest in the stock market, in the sense that you can make a lot of money, you can lose a lot of money. It's liquid. So basically, you can always sell your investment and liquidate it and use the cash. It's easy to diversify it, because you don't need a lot of money to start with the stock market. You can buy very few stocks, and some of the brokers will allow you to buy fractional stocks. So a couple of $100 would be sufficient to start with. But as in any investment, you have to know what you're doing. The history teaches us that if you have enough breath, you will always make money for the long term. However, life events are not always planned for the long term. So people who invested in the dot-com stocks in 2000 or in the NASDAQ in 2000 had to wait 15 years to see the index coming back to where it was. If they have the breath to do it, and if they waited enough until 2024, they made a fortune. If they needed the money in '08, they lost a lot of money. So it all depends. I think that eventually, talking about diversification, the answer whether it's better to invest in real estate or in the stock exchanges is in both, because each investment serves a different purpose. And in the stock exchange, like any other investment, any other business, of course, you have to gain knowledge. Obviously, you can start small. You can start investing in indices rather than in specific shares. You can test the water. And of course, you have to define to yourself what are the goals of your investment in order to be successful. But it's a marathon. It's not a short run.
And you mentioned in the past too that with the real estate part, of course, you can take a loan, and that's how you can start your
Sure,
investment. Well, the stock market, you're of course going to have to invest your money.
of
So,
course.
in my perspective, if you're considering, of course, you have that extra money that you're talking about to put somewhere. For example, I started first, with the stock market just because it was more accessible to me to start with $200, right?
Sure.
Than like what I was going to put in a property. So, what is your perspective on that? And you mentioned too in the real estate part to start earlier, right? And I completely agree with you. I remember in my 20s, I was seeing people, like already investing that they were in their 30s, and I didn't start it there because I felt, like like I have a lot of time to retire, because I think that, as you're saying, most of the time investment really related to retirement, to what we're going to leave after.
Sure.
So, do you consider that it's important to the age that you start?
So, well, first of all, as early as you start, you make more money and you have to invest less. I think that one of the major issues that we face here is that as people get closer to the retirement, they realize that they didn't save enough money for the retirement, and we want to believe that once we will, get to our retirement age, we will be able to downsize. In reality, we got used to certain standard of living, and it's very difficult all of a sudden to downsize when it comes to our expenses. And as we advance with our age, we have expenses that we cannot even think about when we are in our 20s, because all of a sudden we have more medical expenses, and other things are more expensive. Insurance is more expensive. Everything becomes more expensive, and all of a sudden you make less money, because regardless of how much you save, you make less money, and you have to find a way to downsize. If you start early, you save more money, you have more money for retirement, and obviously now that lifespan is extending, the earlier you start, it's better for everybody. I want to relate to one point that you mentioned about the ability to leverage with real estate. So I think that any investment requires very high level of self-discipline, and you have to do two things. One is to separate emotions, as I said, because if you get in love with a property or you get in love with a stock, you think that the company is cool. I like the company, but still the company doesn't perform well, and the stock is starting to come down. The price of the stock is starting to come down. You have to disconnect your emotions and make the decision to sell. When I'm talking about self-discipline, the advantage of being able to leverage can become easily a disadvantage if you're not self-disciplined, because this is a long-term commitment. Most people will take a loan for 30 years. 30. It's a lot of time. I have no clue what I'm planning to do in next year. So 30 years obviously is a very long time, and people have to understand. Investors have to understand that nobody um, promises to the investor that the property will be rented 12 months a year. There will be no vacancy. There will be no unexpected repairs. There will be no non-paying renters that will take time to evict. And we have to plan for the unplanned and have like a small emergency fund on the side, because the one thing that never stops when you invest in real estate is the mortgage payments. The lender becomes our partner for the entire term that we hold the property or until we pay off our loan. And if we're not, and they are a superior partner, meaning for them to enable us to take 100% of the profit, because we are taking 100% of the profit, they want to have priority in getting their payments. So if we don't have any income from the property for some reason, still we have to have sufficient funds to make our payments, or we will lose our investment. When it comes to investing in stocks, although there are very advanced investors that may leverage investment in the stock exchange, but we're not going to cover it today. In stocks, you invest your own money. You can lose your own money, obviously, if you make wrong decisions. But again, you have to disconnect your emotions from your decision making and be analytical. Investments, it's not for people who are emotional. It's for people who are analytical.
Good.
I heard a term of hold and then sell when it comes to stock. They buy when it's low price and then they hold it and then they resell it when once the price goes up to earn more money. And like you say, I think it's something that you have to think it very carefully, meaning letting go of the emotions, like you say. But if I were to ask you, Efri, when it comes to stocks and basically starting from zero regarding it, um, you recommend a young person to start with stocks, or do you recommend a young person to start with real estate?
Well, both. It depends.
It
So
doesn't have anything to do with the age, right?
So it's not age related. It's mainly your ability to have sufficient savings to start a business. And with the stock exchange, the barrier is extremely lower. So my younger kid, my son, became a young adult just a month ago. But even during his high school period, he managed to invest money in the stock exchange because the barrier is very low. And today most brokers provide you with tools that enable you to learn while you invest. So you can research a lot, but they're automated tools and AI based tools that basically will diversify your investments even if you invest a very small amount of money. So the barrier is low. It's very easy to get data. Sometimes you're overflooded with data. And for most starting investors, most people should avoid following trends. It's the easiest to follow a post that you saw on Reddit, but since Reddit is anonymous and you don't know who is the op behind the name, you can never know if it was an expert or just somebody that they thought that it's a great stock, but it's not based on data. So I think that to make a responsible investment for starters, I would recommend first of all to do the research. Secondly, most platforms will allow playing with virtual money. It's awesome. You get virtual $100,000 to invest, and you see if you can actually make money or not. Sometimes it's frustrating because on paper you could have done $1 million, but on the other hand, if you lose the $100,000, it's not real money. And I think that like in anything, you have to develop expertise, and it's like riding a motorcycle. Okay, you have to do it while you are following your skills. If you're trying to beat your skills, you will flip over very easily. Yeah.
And I have another question, Efrem. Um, and I'm going to say that one of the things that I admire about you is that you know how to balance to the fact of doing this investment, saving, and at the same time enjoying life, right? And we had these conversations
Sure.
before that it is important to be able to enjoy, right? Like we, as
Of
you were saying,
course.
we were really hard, and there are a lot of people that they just put all their money in investment, and then they never have money or time actually to take a vacation or to go with their families. So that is one of the things that I admire about you, that I think that you're an investor, and of course you still have that time like to enjoy life. What will you recommend to everyone that is interested in investing either in real estate or the stock market? Because as you're recommending that there's a mixture, right? That there's diversity. So this requires to divide our money. What do you think that is key here for you to have that balance in terms of where you divide that money in terms of your budget?
You can start always small. So as I mentioned before, even for investment in real estate, you have today tools that you can invest a small amount of money into a fund or into a financial tool that is invested um, in a certain asset class. So you can invest in generic real estate. You can invest in specific real estate. You can even have an investment in rental real estate, or several companies or funds in the stock exchange that are being traded that invest in this specific asset class. And then most likely, talking about balance. So I don't think that you have to put all your money aside, because, nobody knows what the future will bring. We always think that we'll live until we are 100. But in reality, if you look into the statistics, lifespan here is in the upper 70s, close to 80. So it means, and it's an average lifespan. So you can never know what the next day will bring. So I'm a great believer that you need to keep the balance. It's not necessarily that you have to spend a lot of money to keep the balance, because sometimes I enjoy myself just walking around the lake here in downtown Austin, and it doesn't cost me nothing. I park my car where it doesn't cost even to park the car, and then I walk, and I enjoy the scenery and the weather, unless it's in the summer, and it's good enough. So it's not necessarily that you have to go for each vacation for St. Nevis and Kitts or the any other destination in the Caribbean. When it comes to investment, I think it's a lot about self-education, and I think that you can diversify. Obviously, to start with real estate, you have to have sufficient equity to start with. So if I had to advise, and this is my advice for my own kids, is that I tell them, hey, first of all, when you're very young, put a little money aside in your savings account. It doesn't give you much yield, or you put it into a fixed income account, which will not give you much yield, but you're being educated to put even some of the money that you saved of doing odd jobs. Okay, so my kids were putting the money that they saved by babysitting or washing the neighbors' cars. They were putting a little bit of this money aside in the savings account, and most banks will allow kids and teenagers to open first accounts. And again, that will not build their equity, but it's about self-education, to put a little bit of money aside. I think it's crucial also to educate your kids to buy some of the things that they want to buy with their own money. It's part of education, even if it's just a gum or a toy or something like this, because then they get the feeling of the value of money. And as young adults, obviously, I think that my best advice is to start small, but to start, because the effect of compound investment is huge. And in layman words, just to explain compound investments, if I put $100 now into let's say a fixed income account that gives me 5% a year, so next year I'll have $105. But on the following year, I invested already $105, and let's say that I have another 5%. The 5% are over the $105. So now I will have more than $110 already in my savings. And basically, whatever I saved is already creating or generating yield as well. It's not money that's getting lost. And the effect of the compound is huge. And as early as you start, and I know it sounds like a mantra, you make more money for the long run. At a certain point, when you get sufficient equity, it's advisable maybe to diversify and put some of the investments into liquid assets, which the stock exchange covers that, or any other liquid assets. It could be fixed income accounts, bonds, and more sophisticated investment tools. And on the other hand, to look into real estate, which is a long run investment that, based on history again, was always yielding.
Yeah. And you talk about discipline too. And I think that starting in a young age, as you were saying, it creates a habit too. That I think that is that psychological part that we can talk about, that it's related to the education that you get. Because and I remember in our Spanish podcast we were talking about Leah, and I really like the concept that Leah has about saving, that she says, I pay myself first, meaning
Yeah.
that she puts a money aside for her savings. And I really like that the way that Leah sees it, because um a lot of the times, and more where we're kids, of course, you get money and you think about the best toy that you want to buy, or
Sure.
going out with your friends, right?
Spending.
Expanding, exactly. So I completely agree with you that I think that discipline, and related to with the balance that we're talking about, is that part that you're maybe, you want to go to Bahamas, or you want to go to Dubai, right? But you need to check if your budget makes sense more, to go, I don't know, like to the park, as you're saying, and have a picnic there. So I think that it's a really good point, the fact that you're saying that as younger you start, it's kind of like developing that discipline and that habit, that of course it allows you to create that. In a way, it's a pipeline, I think, because you have the savings to eventually invest either in the stock market or in real estate. But it's a plan for the future, that you're starting as in a young age, not necessarily with the investment, but preparing with the money that you will have for the investment.
Sure, it's all about learning how to manage your money. As I mentioned before, I'm a great believer in keeping the balance, but you have to always, keep your expenses within your abilities. And I think that one of the diseases of our era is that people use leverage for consumables, for instance. So it doesn't make sense to use leverage when you buy perishable food, because next week you're going to buy it again. Next week you're going to buy it again. So if you don't have enough money to, to buy something which is consumable, then just don't buy it or wait with it. When you leverage for the purpose of investment or for capturing equity, it's a different story, because you have an asset, you create an asset. So I'm not claiming that you should not, spread you finance your vacation over 12 months. If you want to take a good vacation, that's fine. But if you take a vacation every month and then you spread everything over 12 months, then you will be paying the whole amount each and every month. So I think that the advice here is to start with financial education as early as possible. And then also, since there's no real barrier to make investments, as early as you start, or if you put a portion of your monthly income, even a small one, 25 bucks, 50 bucks, you put aside, over time, it creates a small fortune. And it can be used also always as an emergency fund if you need it, or to finance that awesome vacation in the Caribbean that you were dreaming on, or to buy something that is consumable or non-consumable. So I think that, from the educational point of view, it's clear. I think that, if I'm trying to summarize and give a proper answer to the question that I was asked at the beginning, um, I think that, again, in our era, there are many abilities, many options. It's crucial to start early. It's crucial to diversify. There's so many tools out there. You don't have to be a top line expert to start. Obviously, you have to educate yourself and learn and research, and of course, to continue and play within your skills. So I would avoid making investments in derivatives, for instance, before I do understand what are derivatives. So it's like being a baby. You need to crawl, and then you learn how to walk, and then you learn how to run. And then all of a sudden, you learn how to run a car.
Yeah.
Agree.
Well, thank you so much, Efri, for being with us today. I think we covered everything to respond the question really well with diversity.
Yeah.
Um, so thank you so much for being with us today. Exciting to have you as our first guest in our first episode.
Thank
And
you for inviting me. My
yeah,
pleasure.
Especially with this important topic that everyone wants to hear about and learn about.
Yeah, sure, of course. And now let's go and check what the stock market made today and check our real estate.
yes.
Okay, thank you very
Thank
much.
you.
Thank
Bye bye.
you.